What's up, guys? Sam here, and I'll be doing the free video for Friday, May 3rd, 2024. So another week is in the books. I just finished making the premium video for the folks in the gold room, and I'd like to distill it for you guys here on the YouTube. Basically give you a cliff notes of what we saw in the longer video, and there's a couple of changes that I think are pretty interesting going into next week. Primarily what's happening outside of the indexes. I think the dollar, I think that interest rates are more interesting, and then those can potentially have a good feedback loop back into the equities and indexes. So let's start here with SPX. Keep in mind, I already did the video for the folks in the gold room, and we looked at the SPX, we looked at the NDX, we looked at the Dow, we looked at the Russell. But just with you guys, I'm going to look at just the SPX. And the reason being is because everything kind of merges together in the SPX, so I think we can kind of shortcut it that way. So let's take a look at a couple things here, see if anything really has changed. So we do now have a second close above the weekly 8, which I think is generally good. I'm not entirely a big fan of this candle here, but I can't knock the fact that it has made a higher low, a higher high, as well as a higher close than last week. Don't love the pattern, but I cannot knock the fact that it has all of the good characteristics that we would look for a continuation candle. In terms of the setup for the week, that hasn't changed, right? We still do have a little bit of thrust to the downside. It's not of the strong variety, so it's not too big of a deal. And of course, that won't change until the daily changes. So let's go over here. What happened here on the daily? Well, at this point, you do have a bit of an attempt at a reversal there off of the trend oscillator. You can see it gave you a kind of a slingshot there where it went down and then up, as well as right here. So probably the reason that this is the most interesting chart to show you of all the 4 indexes is because you have your arrow there, you have your arrow here, and you have your arrow here. And when you can get that triple alignment, basically something that looks kind of like this, that is exactly what you want, right? Here's the opposite right over here, right? So when you get triple arrow alignment, that is usually going to be a decent signal. The level that I'm looking at is probably the same level a lot of people are looking at, and it's going to be 5130 to about 5150 on the SPX. That's going to be a pretty thick zone of resistance, and if the bulls are able to flip that zone, then pretty much everything I would expect to go higher, potentially back and retest that 5200 area, but look for that resistance right around 5130 to about 5150 on the SPX. Let's move on to bonds, where I think it's a little bit more interesting. So, shout out to Henry for calling this level out. It was not a level that I had ran, but it is a very important level. And actually, now that I look at it with the TNX, it's even more important. So this is the 10-year interest rate, and right now it's sitting at 45, which means the 10-year is at 4.5, which is good, right? If you're bullish on equities, or you have credit cards or a mortgage or anything, if you're looking to do anything that requires financing, this is probably a good thing. But for us as traders, keep in mind the market likes lower interest rates, and this is probably the chart of the week. Now, I'm going to give you a little bit of opinion, but I'm going to tie it back into the chart so that it's subjective. My opinion, I watched the Powell presser, and my opinion of it was that he was actually pretty dovish. My read on him is that he was very dovish. He pushed back pretty strongly on rate hikes, which I always thought was completely silly. I thought that was the fact that the street believed that was even a possibility, or at least pretended they believed it was a possibility, was crazy, and I think that's been changed. So the possibility of rate hikes, I think, are definitely off the table. But then he was also dovish beyond that, in my opinion. And of course, if the Fed chair is dovish, then that has a positive feedback loop into lower rates and, of course, higher equity prices. So if you run this retracement here, and you run this retracement from the high to the low, you're going to end up with a 618 right here at 45.34 and then a 786 at 47.38. Look where the rates have topped, right? 47.38. Now, if they had come down and held right here at 45.34, let's ignore the upper level, although that did end up being basically the high. And let's just focus right here on where the green line and the white line converge, which is right there. The reason that's so important is because if this was going to be a good trend, it should have caught here, right? And when it breaks the level, the green line and the white line converging, then that tells us that this might actually not be a solid uptrend. It's really good to see that you're getting some arrows to the downside as well. You needed those downside arrows to counteract these upside arrows that you got right back here. And I really cannot stress enough, and this is actually something that I didn't look at with the premium folks, so maybe they'll get a chance to see it here on the YouTube with you guys. This is just a massive level. So let's use this, right? Let me give you two levels going into next week, and I think these are critical. I'm going to give you the first level, which you already have, which is the 5130 to about 5150 on SPX. And then I'm going to give you 4534 on the TNX. And as long as the market is below 4534 TNX and above 5130 to about 5150 SPX, that really does clear the way for a potential push into much higher prices. If the market then flips and gets back above 4534 on the TNX, I would pump the brakes on that and go back to more of a day trading approach. But from what I'm seeing, this is a very welcome development for pretty much everything. So big level there, and kind of cool that we get a chance to see it together here on the YouTube, because this is not the chart that we looked at with the premium room. We actually looked at the ZT, but this is just a drastic chart. So I'll go ahead and wrap it there, guys. I don't really think you need much more than that. I think as long as you know your levels, and as long as we're below 4534 TNX and then above those SPX levels that I gave you, I think the path is cleared for higher. And I would primarily focus on interest rate sensitive things. And that would be tech, home builders, high beta tech, like semiconductors, and pretty much everything actually would like lower rates. I'd maybe be a little bit cautious with things like energy. Maybe some commodities may not love it, but in general, this kind of clears the path as long as those levels hold. So hopefully the video was helpful to you guys. Thanks for tuning in, and I'll catch you guys next Friday. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.